Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin. Starting on the weekly time frame with the bullish scenarios, where here we have a bigger double 1-2, after which we expect a very big wave 3 to the upside. Common target area for your wave 2 is the green box taken from the low to the high of this wave 1, giving you a target area between the 05786, 42.9k, 31.4k. The 382 is an uncommon target, sitting at a 48.7k, and the 886 is pretty much an invalidation for a wave 2, very low probabilities, so preferably you don't hit the 886 at 28.1k. What does lower the probabilities a little bit for this scenario is that this second lower degree wave 1 in green is longer in time as well as in price compared to the higher degree wave 1 over here. So in yellow, we have a wave 1, 2, 3, 4, 5. Inside the yellow wave 3, we have the lower degree green count 1, 2, 3, 4, 5. And this wave 1 is longer in price as it passed the 1-to-1 trend-based fib extension taken from the low to the high of 1 to the low of wave 2 over here. And also it made the high after the 1-to-1 fib time taken from the low to the high to the low over here as well. It does lower the probabilities, but it's not an invalidation, so we continue to observe this scenario. Also, besides this bullish scenario over here that we are currently still keeping an eye on, a double 1, 2, 3, 4, 5, 4, 5. That is what we're looking for here, currently working on this wave 4. Common target area for your 4 is the green box 0.236 to the 0.5 Fibonacci, taken from the low to the high of this wave 3, giving you a target area between 63.3k and 53.3k. The invalidation for this scenario is price moving to the 0.618 at 49.3k. If you then zoom in and look at the bullish scenario locally on a 12-hour chart, then we have a regular flat in a wave W, looking for a wave X and then another wave Y to the downside. Preferably your wave X is not yet finished over here because of time. It is very uncommon for waves to have a shorter relationship in time than the 0.382 fib time taken from the high to the low of this wave W, and then double click here and you can see that this high has been made far before hitting the 0.382 on the 3rd of May. So therefore we prefer to look for scenarios where you actually have a wave X finishing after the 0.382, and the flat scenario here is one of them. So we have a 3-wave A, 3-wave B and a 5-wave C where you want to take the high of wave A. Common target area for your wave B is between the 1.236 and the 1.38 for an expanding flat, 57.7k to 56.6k. Here we then want to look for some proof of support, after which we want to see an impulsive structure to the upside in C, finishing X before then a wave Y to the downside, which commonly is a zigzag, potentially a flat, and the most rare structure would be a triangle in this wave Y to then continue this range. Locally on the 4-hour time frame inside this wave B, we are then looking for a 3-wave structure to the downside in a wave A, B, C. 5-wave A to the downside, very short, 3-wave B to the upside in a zigzag, and then a 5-wave C to the downside. Now, the common target area for your wave C is on the chart between the 1 and the 1.618, 59.2k to 55.7k. And in this area, we also have a little bit of additional support, which is the white box over here for our order block, 56.6k to 57.6k. So that's an important area, and also the confluence between wave C and wave B is quite nice here. You can see that the target area for B is in confluence with the target area for wave C. However, we do want to see some proof of support. Let price show us it actually wants to move towards the upside. The bearish scenario on the weekly time frame is a bigger flat to the downside, a regular flat, as wave B then topped out between the 1 and the 105 Fibonacci taken from the high to the low between 69k and 74.4k. And then we want to see a 5-wave impulsive structure to the downside where the common target area for your wave C is between the 1 and the 1.236, which is between 16.5k, 11.6k, and the extension target, the 1.618 at 6.5k, taken from the high to the low of A to the high of B. The best area of support is between 10 and 9k, golden pocket here taken from the low to the high, as well as a multi-year volume profile value area high at 9.7k. Now this means that on the more local time frames, we want to count a bigger impulsive structures to the downside. So we then have a wave 1, 2, looking for a very big wave 3 to the downside. Then we have a more local 1, 2 in blue, and then the smallest degree 1, 2. So we have a triple 1, 2, 1, 2, 1, 2, 1, 2, and we want to see a very big wave 3 to the downside, where the 1.618 would be an absolute minimum for the red wave 3 in this scenario at 53.1k, but very likely it's going to extend to much lower prices in this particular scenario. Now to the downside, we do have a little bit of support. We have a weekly gap here that has been tested once. Now we're moving inside the gap. So this is a gap on the weekly time frame from this low to the high. And we tested it once with this daily candle over here, having a little bit of support, as you can see, which is very common. But if you close daily candles inside the gap, it increases probabilities to fill the gap and move down to 53k. Of course, we have that support resistance area, which we have just touched here, which is important, 57.6 to 56.6k. If this one fills, probabilities really increase to move to 53k. Locally on the 15-minute time frame, we had that bounce, right? Yesterday, price took the low during the live stream over here and moved towards the upside. And like we always say, we wait for price to show a range, right? Because the range will give us all the information we need. And over here at the high, we created some bearish CVD divergences. Price moves down, little bit of bullish CVD divergences, but then it moves up again, more bearish CVD. Starts to move down, more bearish CVD, increasing probabilities to take the low. And this is what it looked like on the AGGR CVD chart, right? Price moving up, lower high here on price, but look at blue, higher high on the CVD, bearish CVD divergence. Then price moves down, and you can see that we have a higher low in price, but a lower low on the CVD. That's a bullish CVD divergence. However, even though we have a bullish CVD divergence, these smaller bearish CVD divergences have a much higher impact. These have a priority, right? So then we move up once again. Yes, we have bearish CVD, but then what happens here is a lower high on price, and we have the CVD line on yellow moving towards the upside, as well as on blue actually. So that's a bearish CVD. And then finally, before we dropped, we also had this one over here between these two candles, lower high on price, higher high on the CVD, which is this one here. And now we took the low, which is exactly according to the probability. So if we then go to the probabilities of the different scenarios, then as it stands on the weekly time frame, the probabilities remain higher for the two bullish scenarios, right? Either or. And on number 2, we have the bearish scenario. We are currently still in a weekly uptrend, simply ranging between 74 and 50k, and in bull markets, having 25 to 60% drops is absolutely normal. So in order for the bearish scenario to really gain probabilities, we first need to lose significant levels, and that would start at least with losing 56, 57k as well, and moving towards 53k, and then depending on how we move to the downside, because in the most bearish scenario, we look for 1, 2, 1, 2, 1, 2. If we move down in a straight line, that is what you want to see in the bearish scenario, right? But we first need to lose some significant levels. Therefore, we also still keep an eye on the bullish scenarios with the WXY on 1, bearish impulse in 2, on the 1 hour flat on 1, bearish impulse on 2, and on the 15-minute the probabilities were higher to take the lows because of those bearish CVD divergences, but this has now happened locally. So general tip at the moment is that price is moving to the downside impulsively, right? And it does so on volume as well. So best is to wait for a clear range, because the range will give us all the information that we need. We also have some news today, Wednesday, May 1st, 4 p.m. and 8 p.m. Central European time. Over here, we have some high impact news, might increase the volatility. Not that we are short of volatility this week so far, but at least it's good to know about. So that being said, I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.